You're listening to AI Prism from Seoul Economic Daily.
Three Wall Street banks went on record this week calling the KOSPI bottom. Morgan Stanley, JP Morgan, and UBS simultaneously. Korea's DRAM export unit prices came in at 523% above last year's level for the first 20 days of July. Korea-linked leveraged ETF liquidation stands at approximately 75% complete. The forced selling that amplified July's crash is nearly exhausted. The yen crossed 163 per dollar on July 22nd, its weakest level in 40 years. And the Bank of Japan is now internally discussing a rate hike timeline that may come earlier than December. It's Thursday, July 23rd. Here's why global investors are paying attention to Korea today. The KOSPI slid into the 6,000 range in July, its sharpest monthly drop in years, driven by semiconductor peak-out fears and forced liquidations from over-leveraged Korean asset ETF positions. Those concerns are being contested by hard export data, server infrastructure earnings beats, and a new category of memory buyer, Middle Eastern sovereign AI funds. At the same time, Korea's petrochemical sector recorded 5 credit downgrades in the first half. A reminder that the AI-driven recovery is not uniform across the Korean market. Here's what the numbers show. Morgan Stanley maintained its 12-month KOSPI target at 9,000 and called the current correction a buying opportunity despite residual uncertainty. JP Morgan held its overweight stance on Korean equities with a 12-month KOSPI target of 12,500, unchanged. Korea Customs data for July 1st to 20 showed DRAM export unit prices up 523% year-on-year and 21% month-on-month. Server-grade 64GB DDR5 spot prices climbed as much as 146% above the June fixed contract rate. Morgan Stanley analyst Joseph Moore projects Q3 memory prices rising more than 25%, with supply shortfalls expected to intensify through 2028. Deutsche Bank projects the memory demand-to-supply ratio rising from 110% this year to 129% by 2028, placing the cycle peak 2 years beyond peak-out assumptions. Supermicro disclosed an AI server order backlog exceeding $60 billion, approximately 89 trillion Korean won, as of July 21st. Confirming hyperscaler capital expenditure remains intact. JP Morgan estimates Korea-linked leveraged ETF liquidation at approximately 75% complete, while U.S. leveraged semiconductor ETF assets under management fell 38.7% from the June peak of $163 billion to $100 billion. The Bank of Japan raised rates to 1% last month, the highest in 31 years, and is now considering an accelerated hike path after the yen crossed a 40-year low, driven by Japan's expansionary fiscal shift and Middle East-driven dollar demand. So what does this mean for global investors? Earlier, we said 3 Wall Street banks called the KOSPI bottom simultaneously. Here's what that actually means for you. The data now supports a Korea overweight thesis on fundamentals. Memory pricing, hyperscaler capex confirmation, and leveraged overhang resolution are all pointing the same direction. The immediate test is this week's earnings calendar. Intel on July 24th, SK Hynix on July 29th, Samsung Electronics on July 30th, and Amazon on July 31st. Intel earnings on July 24th and SK Hynix on July 29th are the first real-time reads on whether the DRAM demand surge survives contact with quarterly management guidance. Nvidia's Vera Rubin NVL72 rack is confirmed for Google Cloud, Microsoft Azure, Oracle, and OpenAI, and with TSMC preparing up to 10% foundry price hikes starting next year, AI infrastructure costs are rising across the full supply stack. The Bank of Japan's policy meeting at end of July is the key FX risk event. Even without a formal hike, A hawkish signal could accelerate yen appreciation and trigger correlated moves in Asian equity positioning. That's today's AI Prism Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.